What's good, y'all? I'm coming at you here today with a 300% multi-day overnight swing trade recap, as shown on the screen here below. It's requested on Twitter, so I figured that on this fine Saturday, I'd give you guys this recap. So to get into this right away here, this is going to be one of the rare times whether you've seen my trading before, whether you watched a recap of mine before, um, or you're new to my recaps and my trading style. This is going to be one of the rare times that I don't talk about option premiums, what option premiums are, and how I can use them to better my trading and how they're my confluence. This trade was more, fundamentally speaking and trading directly off of my charts and what I know based on market analysis and my bias for last week. So to get into this trade here specifically, one thing that you're gonna find out very, very fast with my trading is that I like to use, equal highs, equal lows, and levels within fair value gaps in general, and inverse fair value gaps, buy side and sell side liquidity as my targets, and um, I use equal highs and equal lows as really a form of a magnet for me. If I see equal highs and equal lows, I'm trying to figure out a way that I can take a trade and put myself in a trade with the highest probability so that I can make and catch a move into those equal highs and equal lows. So looking here, you can see that there's these perfectly stacked equal highs all right here. There's three of them, making that to be very, very high probability equal highs. Um, and from here, I'm just looking for my entries. So for me, this daily fair value gap was my entry. I was looking to take longs off this daily fair value gap and looking for some expansion up towards the upside. And ideally, what I did want to see was 1344 get taken. And this was the big mistake that I made in this trade. Um, is that I was in these weekly contracts expiring on the Thursday that just passed, and what I should have been in is weekly contracts expiring this upcoming week. And the reason behind that is I thought the expansion was going to happen a lot sooner. Yes, that is a big dollar move that I would have had to catch, but I really did think that it was possible, especially with the quarter coming to an end, all the hedge funds shifting around their positions, and a lot of the news that we had in the overall market last week. I was wrong about that, but the move and the overall shift in the position that I did catch, 300% you can't complain about. If we did see 1344 last week, those contracts would have easily been 500, 600, even could have been 1,000% gain for all we know. Um, and so, with that being said, um, these contracts as well, and this is why this was a low risk swing for me. If you look at Ford contracts, and I don't have them up right now, but you can see these contracts have a very, very high delta on a very, very cheap premium. So, these contracts, you can get them for 12 to $20, one inside the money, and they have a delta between 80 and 90. So these contracts could very easily go to zero. But at the same point, if you're correct on the move and you average into these positions, hence I was averaging down as we push down, or averaging in as we push down, these contracts can really do insane numbers if you catch the proper move. So, and also on this trade, you can see, Fibonacci tool, if anybody uses the Fibonacci tool, right inside this golden zone right here. So it's a great entry as well. So I averaged in as we made the push down, but this isn't my only confluence on this trade. I've been having and owning Ford for quite some time now. Really, since I started trading, it was one of the first stocks that I owned. I've looked at, done analysis on. I've never really traded options on it that much until recently. But something that I do want to point out here is that, you know, these lows on Tuesday, October 31st, is when Ford bottomed. And if you go to the indices, you can see that these exact same lows that are on here on the 31st, generally speaking, the 30th, are when the S&P 500 and the overall market bottom too. So where is that correlation and how can I use that? I can use that to understand that Ford moves very, very fluently and follows overall market structure and how the market moves on a daily basis. So this was another confluence that I have. With me being as bullish as I was last week on ES and NQ, obviously NQ hasn't had the move yet, and it's you know, it hasn't had its expansion, which we could see that next week. Uh, Obviously, I was bullish on the market inside this fair value gap. We went below, I'd flip bearish, but I was bullish on side of the market as a whole. So with that being said, that gave me an even bigger confluence to go long on Ford. and to really see these equal highs getting ran up. At these equal highs, I think I was about like 240%. And then once we ran up to my second take profit level, that was about that 300% mark. I tried to hold a runner till end of day, but the contracts went towards its expiration, so I was settled with what I had. But yeah, this is the trade recap and why I took this trade. You know, bullish on Ford, bullish on NQ and ES. Really was huge confluences with those equal highs above. Off the Fibonacci tool, really you cannot go wrong. You can't. I couldn't go wrong. This was a very, very, very high probability long setup for me. So that's basically it with this trade. If you haven't yet, hit that like button, hit the subscribe button, turn on those notifications. I'm going to be coming with a lot of trade recaps very, very soon, as you know, this next quarter starting in the market and we're about to kick up the speed. So I hope you guys have a great weekend and a great start to quarter two as well. Peace, y'all.